Hey, what's up, everyone? This is Niyi Adewole with the Ekabo Home Financial Freedom Mastermind podcast. And this group is for anyone that's looking to not take the normal course of working 40 to 50 years and retiring at 65. But if you're looking to retire early and achieve financial freedom and be able to control your day, this is the group for you. We bring on different guests, we have conversations with each other, and we're all working toward achieving that financial freedom early so we can truly enjoy this life that we have on earth. But today we're going to talk about real estate and, more importantly, two specific topics. One of those is the impact of interest rates on real estate investments, especially in this market that we're in right now, given the Fed just raised the interest rates again. This is a hot topic. And the other piece is on strategies for actually financing your real estate investments. And so first and foremost, let's go ahead and handle the elephant in the room. Okay, the high interest rate environment has made it more difficult to find cash flowing deals that make sense year one or year two. And so a lot of people are throwing their hands up and saying, hey, if it doesn't work on paper right now, I'm not going to invest in real estate. And I believe that that is a mistake. It's not going to get cheaper over the years. When you look at what your parents were able to buy houses for 30 years ago, that's not what we're getting them for today. And 30 years from now, they're going to be looking back at this time like, man, I'd buy anything for those prices. And so when you look at the high interest rates and the impact that's having, what it's doing right now is it poured some cold water on a hot and fiery environment that we had from 2020 all the way through middle of 2022. And it's allowing buyers and investors to actually negotiate for certain items. I can tell you that back in 2020 and 2021, if you even tried to put like, hey, I need you to repair something, or can you give me some seller credits toward closing? It was very difficult to get the sellers to agree to that because they had 15 other offers and they just say no and go with the other offer. Furthermore, even like for FHA buyers and first-time home buyers, things of that nature, it was even more difficult for them because if there's multiple offers on a property and somebody else can go conventional versus your FHA, that seller more than likely is going to take the conventional because there's less red tape than going with that FHA or even like a VA loan. And so the higher interest rates have taken some of the buyers out of the market, and it's allowing us to be able to negotiate with the sellers to get a better price on these properties. And furthermore, once the interest rates do come down, which is going to happen at some point over the next couple of years, right? When it comes back down to say a 4% or a 5%, you can just refinance that deal that you got and it becomes an even better deal for you because now your monthly payment has decreased. So that's around the high interest rates. Now let's talk about strategies for financing your real estate investment. There's really a lot that you can go to. My top strategy, and this is one I recommend for any new investor and or anybody that's willing to do this once a year, is to house hack. And what a house hack is where you buy a home that has another portion of the home that's rentable, whether that's a single family with an in-law suite or a duplex, triplex, quadplex, and you live in one unit and rent the others out to help subsidize your mortgage. This is an incredible way to not have to put down as much money on an investment. When you look at typical investing, when you buy a house for an investment purpose, the bank is going to require you to put down anywhere from 20 to 25% on that home. When you go to house hack a home and do a similar thing, live in one unit, rent the others out, you're getting the benefit of the bank saying, hey, because you're going to personally live there, you could put down 5% or 3.5%, and you could put down significantly less and keep the rest of that money in your pocket for future investments. Not to mention, think about the savings that you're going to have just on your monthly rate. I worked with a client recently that was paying about $2,000 per month to live in their apartment, and we bought a house hack, a single family with an in-law suite. And when they rent the other unit out, it's going to cover over 70% of their mortgage to where they're only going to be coming out of pocket about $1,000 a month. And so they're saving $1,000 a month. They have somebody else paying the other portion of that mortgage. And when they move out, now they can rent their unit out and they're cash flowing, and it turns into an even better investment. And so that's one strategy I would use. Another one is to look at DSCR loans. This is a loan where you're able to look at the rent to income ratio that you're actually bringing in from that property itself. And you can put down, depending on your credit, as little as 15% to buy an investment property, even in today's market. I used this to purchase a house late last year, and I'm planning to use this again to purchase a couple more investments. But it's a way to avoid, if you have income restrictions or you've been tapped out from a debt to income ratio standpoint, this is a great way to kind of get around that and allow the property itself to qualify you for buying that home. So those are just a couple tips. Thank you guys. Please don't forget to subscribe, like, and share if you found this content valuable. And go ahead and join the Ekabo Home Financial Freedom Mastermind group. We meet every Wednesday at 7 p.m. Eastern, and it is full of individuals that are striving toward financial freedom, that have different stories, come from different walks of life, and are all on different portions of that journey to financial freedom. And so if this is resonating with you, subscribe, like, share, and join the Ekabo Home Financial Freedom Mastermind group. Thank you guys. See you next week.